Hi, welcome to the Market Alert for Thursday, the 16th of December 2021. So UK news yesterday, inflation surges to 5.1%. This is 10-year high, and that was up from 4.2 to 5.1, so just under 1%. We then moved over to the US. Fed doubles pace of taper, now expects 3 rate hikes. That's optimistic. One will be a problem. The markets love the FOMC for now, and a puzzled Wall Street reacts to Powell and the market's furious melt-up. Everyone expecting stocks to tumble after the FOMC. You know what that means. Absolutely. It means it's going to go higher. Santa rally because they can wait until the first rate increase or the taper to stop, and then the market will react. But at the moment, everything is fine. Turbo taper sparks market turmoil, yield curve, dollar signal, policy error. The usual good cop, bad cop combo, hawkish statement, dovish press conference. So yeah, that was all of yesterday's news. There was a lot, obviously, in today, Thursday, as I mentioned in Monday's alert, there's a lot of news out today. We're going to kick off with the flash news. That's out all morning. That's always a pain because the market gets going and then it gets distracted. However, today may be an exception because the market's already factoring in the fact that Powell has already said what he's going to do, and the market seems to be rather bullish on the overnight with this. We're then over to the UK at midday with rates, etc., all to remain unchanged. There's a lot of news there at midday, and then we're off to Europe for 12:45, 1:30. And then 1:30, we've got all of the US and into the afternoon as well. So a lot of news today on top of the Fed's news last night with the turbo taper and the 3 potential rate increases. Let's have a look how the market reacted. We'll start off with the Dow. There you can see the market on the daily chart moving up, trading up towards the 89%, 78% overnight. Up to the close of yesterday, and then overnight the market heading towards that 89%. So it looks like the Santa rally is firmly in place at the moment for the Dow, as we can see prices starting to move to the upside. If you have a look at the 30-minute for yesterday, you can see the market's reaction came back down to Tuesday's low, and then turbo move, as they said in the news, all the way up, and trading up to yesterday's high at the moment, where it's just finding a bit of resistance there. But still looking rather bullish there, isn't it, at the moment for the Dow. It's traded sideways, as did all of the other markets yesterday morning, waiting for the Fed's news, or for Powell's news, I should say. So in the German DAX, not as a bigger move, but finding support at that 200 MA and the 50% retracement. The market moving higher now, and then we've got this green line and this green line. So let's just draw in the fibs between these two lines to get the shorter term trend there, and this will give you, let me just remove this one, and there you can see where today, in fact, let me just remove the ones that we don't need. There we go. So the 89 and 78 there are the important ones to look out for, plus the high from this bar here. And then, of course, you've got the bar after as well. And there'll be resistance at this high because if you draw in the fibs from this to this one, this will give you about 89% retracement as well. So that's where we are with the DAX. Of course, there's always the chance that today that the euphoria disappears and they move the market to the downside. So, we've still got the markings and areas of support there with the 200 MA, the low of these two bars, and the 50% retracement there, just in case prices move to the downside. Yesterday, the market was waiting for the Fed. There was barely any movement, and even the one potential sell signal there, you can see that you were warned sufficiently that it wasn't going to go anywhere. It just traded sideways and then moved back up 89% before then moving down, but really quiet, and then it just went sideways. I mean, dire until the opening session at 2:30. The market managed to move down 50 points and then just traded sideways again until we got the FOMC, which you can see there. Then the market reacted and moved to the upside, which is bizarre. Like I say, given the prospect of 3 potential rate hikes, it's interesting to see that the market is actually moving to the upside. But again, of course, what you could do is actually carry on at the moment, because the threat is not imminent. It's going to be in the new year onwards before they even consider, even if they attempt to do it, move rates to the upside. I think they'll actually, never mind tapering, I think there'll be more QE given what's going on with this so-called Omicron variant and how it's starting to play out, certainly here in the UK, with the prospect of furlough coming back as well. So I don't see how they're going to taper or raise rates next year myself. If they do, it'll be catastrophic. And the market's struggling to hold on the highs at the moment. It's not making great strides like it did before. It might be at the moment. You can see prices moving higher there, as we've just looked at, heading to that 78% as I actually record, and it's only 6 a.m. and the market's moving quite nicely there. So there was some interest in getting the market to the upside as much as possible. And finally, in the metals, before we look at these, let's just have a look at this headline that I found this morning as well. Silver on sale, silver gold ratio back above 80 to 1. In simple terms, historically, silver is extremely underpriced compared to gold. At some point, you should expect the gap to close. That's what I've been talking about for years, but of course it's manipulated, so that makes it very difficult. And also the 80 to 1 ratio, which I have spoken about in the last few weeks as well in the alert. Let me just scroll up here. It should appear anytime soon. It's just refreshing. But as I've said before, many times, the price of silver at these levels is so cheap. It really is, compared to 79, 2011, when it was $50 or just under $50 an ounce. It's $22, is it, from last night where we are? $22. Incredible. So 60% cheaper than it was 42 years ago. So you can see them buying back here. And the reason they've bought back here, exactly right down onto the actual price. So I've drawn in one from here and one from yesterday's low, and you can see the prices there are exactly the same. So they dipped the market lower. If you have a look at the 30-minute, as the news hit, actually, so look at this in the 5-minute chart. Yeah, so they just dipped the market or prices lower, and then brought it back all the way up 50 cents, and it's held. And I'm surprised, given the fact that he's talking about his turbo taper and 3 rate rises. You would have thought the fact that they are not imminent, that they would have actually slammed the price of silver. I mean, there's plenty of time to do that today and bring it back. Don't hold your breath. But, because say the opposite of that is that they're moving the stock market up at the moment when that should be coming down. So very, very strange. So anyway, if it is to move higher at the moment, then we want to see the market get back above this 89% retracement. Again, I'm just using these 2 lines. There is a green line in here. If I just remove that, you'll see it. And that, the 89% is going to be, and the 78 is going to be a very interesting area. It needs to be taken out. Then I'll use these other lines if the market does manage to make any move to the upside. Not convinced of that just yet at all. It may be a case that they continue to hammer the price to the downside, as they'll use the Omicron variant and a slowdown in the economy to actually pull that one off, as they did in March 2020 when the gold-silver ratio went to 125. So there we're seeing gold also moving higher. Yesterday went through the 289s that we've got drawn, and then just finding support obviously in this area. Bit of buying coming in, we've got divergence, and the market attempting to move higher. Got to take out these 2 lines, and that will have a lot of all of the averages in this area as well, so they need to be taken out if gold is to move higher. And in the dollar yesterday, of course, the threat of rate increases was a negative impact on this. This volume you can ignore really, because we've got the rollover from the December to March contract going on as well. So a lot of that volume can be a switch Or the volatility can be a switch as well, because this is tick volume and not contract volume. But interesting to see the market come back to 89% there as well. Nearly a double top, I suppose, in some ways. Yeah, more of a double top than 89, and then move to the downside there. So yeah, it should be an interesting day just to see how the market's going to react to what Powell had to say yesterday. We'll wait and see if it continues to be bullish, as we've got the prospect of the Santa rally, Christmas bonuses, and then I think into the new year, the reality of 2022 may kick in again. Watch out for the Omicron variant being used to slam metals and also the stock market, but not until the new year, I would have thought. But you never know. You really don't know, because they're whipping up the fear-mongering in the UK at the moment to a level I didn't think we'd see again, but it's on some sort of a scale, and they'll use that to hammer the markets, particularly if they start closing down bars, restaurants, all that sort of thing again, and entertainment. So be prepared for both sides, the Santa rally and the Omicron, two opposites there. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.